Hey guys, how are you? Vladimir here, and this is the weekly trading plan for the whole list that we trade. First of all, welcome to all those of you who watched that for the first time. I hope you enjoyed that. This is Monday. On Monday, we always prepare our entire week, meaning this video is normally the longest one. Now, I couldn't do it live today as I'm just back from my lecture trip in Bulgaria, so I wasn't quite sure about the time when I would be available to do that, so I record this video for you. This is the trading report, which you will see now. That's our trading report, one that you receive after the live trading rooms. The idea is very simple. We go over all the instruments and trade them. So once you get that for the first time, we just watch the video how to enjoy this trading report. On the comment section, you would start to see the table with all the most important webinars and videos you better watch inside the members area. On the bottom, you would see the table. So by the table, you click on the chart and it opens and shows you our trading plan. And that's basically what we are looking to do. Okay, so just click it and basically expose you to the chart and our ideas. This is previous week report. So slightly above you would see the full explanation about each of the instruments. Forex, indices, commodities, CFDs and cryptos, whatever we trade and whatever is available, and a short-term trading ideas. We are bullish, bearish, neutral, or both. Some short-term could be one direction, long-term could be the other direction. Everything is explained in the live trading room, so report is just a summary, so make sure to watch the video to understand what and how we validate it. So let's start. We will be going over the report and all the instruments. So the first one, this is, by the way, before I begin, this is very important fundamental week. A lot of discussions to expect this week. So important numbers to be published. And it's, of course, the first official week of the December, the last month of 2018. So the non-farm payrolls is expected in Friday. Before that, we had a speech from Powell and the OPEC meetings, Canada cash rate, speech from Draghi, and more. Busy week. So let's begin. We are going over technicals, of course, but we do respect the influence of the news, if will be any. So let's start. Euro dollar is the first pair. We will first of all cover the European pairs. Euro dollar, double cycle from the weekly chart, bullish divergence. Each of the legs is confirmed as a cycle by itself, meaning we are after buys. Since the weekly is a cycle with bullish divergence, daily is a cycle with a bullish divergence and confirmation for the weekly legs. We did not yet get any higher highs, so there is no change basically yet for the long-term direction, so we are based yet on short-term. Since the weekly is a cycle, we expect daily to be corrective. Daily to be corrective meaning two waves or stay in a range. So we had one false break. We don't have false break on the top. We might get one more false break on the bottom, but our idea is buy the dips. So we are bullish, dropping to the 4-hour chart. Every time 4-hour chart will become bullish for us with a bullish trading setup. Two waves, bullish divergence, etc, etc, etc. We are turning into the buys. Could that try and make a new low? The answer is 100% yes. Would that change any of our plan? No, because the weekly and the daily cycle suggest buys are safer. Therefore, we're looking for the bullish setups. Euro versus the pound is our next pair. Basically, our idea here for long term is bearish. However, on the short term, we do not yet have anything clearer. Daily looks like it's building up a cycle here, and which comes very good after the triple cycle, but it has to stop in this area, and each of the legs on the 4-hour chart has to be a cycle by itself. Now we do have a problem here with the first leg, because the first leg is a straight move up without real clear two cycles. Same currently happening with the two legs, the second leg, sorry, even though second starts to be much clearer, developing a possible divergence. Now, if that would be the case, we would accept here as a possible special cycle to be counted for one reason, because the correction here comes in two waves. So that would be a possible special cycle scenario, something like that, correction in two waves, and now this. So short term, acceptable for both directions. For the long term, we would prefer to see that stopping in this area and retracing down. False breaks and sells would be ideal, of course, and we should look for the setups. So long term is bearish for us. We are looking for the validation. Short term can push higher, but the preference is, of course, to look for the next possible sell setup. So short term, acceptable for both directions to be tradable. Current momentum is bullish. Long term, we are after sells. Euro versus the yen is the next pair. The idea for us is bearish. The reason bearish hidden divergence is the last divergence available from the weekly chart. Daily chart, the last divergence was bullish here. So we don't have clear cycles here, so basically that's why we are based on the divergences. As for now, the idea is very simple. We are after sells, so to do that we need the daily to become bearish, so something like that with divergence and sell, right? Or some kind of a range which currently develops a possible triangle, and that means the 4-hour chart has to provide a clear setup, because for now, as you can see, there is no clear setup. Therefore, there is probably neutral approach at this stage. So we are after sells. There is nothing clear, clean, and inviting currently happening with this pair. So short term, I would say neutral. And longer run, we are after sells. The next one is the euro versus the franc. We were bullish and we're still bullish. Our idea is for buys. So we would expect basically this, right? We got a triple cycle down. Now we have the first, and we would expect this. So euro franc is bullish for us. We are looking for buys. To validate it, we can go to lower time frames, trendline breakouts, higher highs should provide us the buy opportunities, and we got the false breaks here happening. Finally got the convergence, right? So the euro franc has the momentum for us, and of course this momentum is as long as we are holding above the invalidation. So euro franc, we are after buys, looking for the bullish setups with any of the strategies you use. Euro versus the OZ, we were bearish on this one. Now, previous week we accepted the short-term retraces. We were looking for deeper two waves or a range. Instead, we got two waves with double top right here with a bullish divergence. Then it was broken and the lower lows. Since that moment, the game is back to bearish. That was on the second part of the week, and we're still going. Now, will that continue? As for now, there is no reason why not, right? But we do have to remember we come closer to the final possible target, which is 50%. As for now, we are fighting the 38.2 of the weekly triple cycle. Final destination, still the 50%. Daily possible divergence, and I say possible because it's yet to be formed and completed. Divergence is forming for our chart, does not support this divergence, therefore euro versus the OZ is still bearish. And the same exactly happening with the euro versus the Kiwi. A straight move all the way to the downside, approaching to the target of this triple cycle, getting very close to it. That's around 162, meaning get ready for the buys. Don't rush with the buys. As for now, it's still bearish. No false breaks, no higher highs, no turnaround. It's coming, it's building up, it will happen. It's not ready yet. As simple as that. Therefore, Euro Kiwi is bearish. And the euro versus the CAD, we were bearish on the previous week and we are still bearish this week as well. The idea here is very simple. Triple cycle from the monthly, we are trading for sales, aiming the 50%. Weekly has to be with us, but weekly was against us with this bullish divergence. Therefore, we were requiring a corrective cycle. So daily has to become two waves. Daily did become two waves. And basically, since then, we are bearish. The idea for us is sell. The best scenario would be if this trend line is broken, sell the rallies. Is classical situations in that case. Meanwhile, we are still here with a bearish principle, looking for sell rallies. Okay? And the last one we had was this bearish hidden divergence with the great push to the downside, confirmation from 1 hour chart it was, and since bearish. So that's for the euro pairs. From my point of view, the commodity pairs of the euros are the most interesting ones, and they are moving and paying. So far, so good. Next ones on the list would be the dollar pairs. Dollar CAD, we were bullish at the beginning of the previous week and we got paid. And we got paid pretty beautifully. So we reached the area that we were talking about the first time, but then we got a second false break. That was the first one with the moving average divergence. So now we got the second one and we got a convergence, meaning daily ticking as a divergence, 4 hour proving it to be convergence. Dollar CAD bearish with this invalidation. Due to all the combinations, we required it to be a corrective cycle. That means 1, 2, or dance in the range. Whatever the case is, we are after sell their rallies. Dollar CAD bearish. Dollar versus the franc, another pair for us that we are trading. Weekly double cycle bearish divergence. Daily supports that with a cycle by itself on each of the legs. And basically we are after corrective cycle on a daily chart. Daily could be two waves or daily could be a range. False break, possibility of a range. This or other way around, it doesn't change any of the plan. The plan is to sell the rallies. We drop to lower time frames, two waves, bearish hidden divergence, and so on, all the bearish confirmations, and we are in for a sell. Okay, so this is what we have for the dollar versus the franc. Next one on the list is the dollar versus the yen, and honestly, at this stage, I would say on the short term we are neutral. My long-term view is bearish here. The idea here is still the cycle from the weekly chart, bearish divergence from the weekly chart. Daily is also building up its divergence. So far looks promising, looks wonderful, but the short term doesn't really support anything of that. As divergence here is bullish, hidden, so we require a corrective cycle and two waves and then breakout or a new high ideally, and a false break with a sell. This or other way around. We are after sells here. Short term could be neutral because there is nothing to do here as long as they didn't get a setup. But for the longer run, dollar yen, we are after sells. Next one, pounds. The pound versus the dollar. A pair that we were neutral previously on the previous week, and honestly, I still am neutral here. The levels are not really attracting for sales due to the bullish divergence developing both weekly and daily and 4 hour. On the other side, there is no reason for buys yet because we don't have the false breaks on the higher highs or turnaround to the upside with convergence. Nothing still happened on this pair. Not attractive for sell from one side, no reason to buy for other side. Therefore, yeah, you guessed it right, neutral. So pound dollar is neutral for us. The next pair on the list we have of the pound is the pound versus the franc. Kind of a mirror to the euro versus the pound. The long term for us is bullish due to the triple cycle from the monthly chart. Weekly has to fit in with daily confirmation. Weekly does not fit in because the last divergence of the weekly is bearish. In order to avoid that, weekly has to become bullish, or daily has to become corrective cycle. Daily, as for now, it's only one straight move. Second, it's still possible to be developed. Therefore, both directions are tradable. Sells possible on the short term before the bulls take the control for the longer term. So pound franc, I would trade currently only for the short term, and both directions are totally acceptable. Next one on the list is the pound versus the yen. Last divergence of the pair, we don't have a clear cycle here. Last divergence is bearish on the weekly. Last divergence on the daily is bearish right here. So the pair is bearish, sell the rallies. Can't say it's really attractive at that moment for that reason. It's stuck inside the last two candles. The moves are anything but clear and attractive. So pound yen, bearish. Can't say I totally love that. The setups are tricky, pretty ugly. As simple as that. Pound versus the Kiwi was and remains bearish on the short term, and here is why. We are right on the 50% crossing through that, possibly to build a bullish hidden divergence. Daily must confirm this divergence, and it's coming. However, to make a turnaround, we require to get false breaks. We don't have false break on the daily chart. We don't have higher highs. We don't have that also on the 4-hour chart. Therefore, as for now, pound Kiwi still bearish. Get ready, because this monster would find the bottom somewhere soon and should fly. Could become a great opportunity. Pound versus the Aussie, which was also bearish for us. Previous week we expected to get two waves correction. We got it here, got it beautifully, and we got a trendline breakout. Since everything else is the history. Now it's ultra bearish. Same story like with the pound versus the Kiwi. We are approaching straight move to the target 50%. Clearing it. Daily is developing a divergence. It must be confirmed with the false breaks and or turnarounds. As for now, none of that happened. So what do we do in that case? Cashing out partially. Why? Divergences start to appear and level is reached. Do we have to cash out all of the sells? 100% no, because we don't have turnaround. So that might be just a little pullback before continuation. There could be easily 3, 4, 5, 600 more pips. Why to rush to make a decision, right? So bearish was, bearish remains. So far, we have an amazing run of the last opportunity we spoke about the sells, which was right here. And so far, you can see by yourself, it's moving and moving beautifully. And that's all for the pounds. The most interesting ones are once again the commodities versus the pound. The rest are building up some nice opportunities. The next one, Pacific, Aussie versus the dollar. Let's start. So we were bullish on the whole last several weeks in a row. So what do we have right now? Last divergence is bullish. Double cycle from the weekly. Target 3080 is almost reached. Almost reached. Daily also providing us the 2 waves correction. And the 4-hour chart provides us confirmation. Problem? The gap. Other problem, no divergence yet triggered on a daily chart, right? So far, just possible turnaround. So nothing really happened yet to stop. So the Aussie dollars was and remains bullish for us. Still, we could easily cross the 0.74, and I would personally wish to see that above this area because a lot of stop losses are located here. So if it cleans that, we can talk about the sells later on. Meanwhile, short-term retraces are acceptable. Daily is a double cycle 4-hour chart confirmed to be a cycle. So short-term pullbacks are acceptable. However, it's still after buys. Aussie versus the franc. Our idea previous week was double wave to the downside. Like 1, and 2. Why? Because of the 2 waves and a bearish divergence. Instead of that, we got a bullish hidden divergence several days ago. Well, beginning of previous week, right? So that means we can go inside a range corrective cycle or 2 waves. So our goal was to get 2 waves to the upside. Sorry, here. Right, get the breakout. This attempt never worked out, failed, and the next one never provided us yet a sell opportunity. So, what do we do in that case? For the long term, we are still bullish. Why? Because of the monthly chart. For the short term, weekly starts to show bearish hidden divergence, daily starts to show its pressure with the next divergence. We are approaching to be on 161.8 and a triple cycle. So the classical scenario from this to follow is that kind of movement before the next fly. So Aussie versus the franc, currently short term is still bullish. However, we would want to see this pull back from this area. It could be directly from this or one more high. We need now the 2 waves correction to the downside or continue inside the range with some big exposure, something like that, right? Before the next future buys. So Aussie versus the franc, we are after sells, reversals, but we can't say we have clear setup as for now. False breaks, lower lows would be ideal scenario for this to reverse. Aussie versus the Kiwi, we are bullish for the long term. However, we never got any higher highs yet. That was the last false break for us. This high never broken. So what could happen here? We can still create some clearance area, right? Make it happen to 161 of this cycle and then make the flight. Bullish for the long term. Short term could push slightly lower, no problems with that. We need false breaks, higher highs, and turn around to start joining the buys. Until then, short term could push it lower for us. Aussie versus the Canadian, another pair that we were looking to trade to the sell direction previous week, and this opportunity never provided us any good sell yet. What happened since that was the case, we never broke the trend line, right, and invalidated the last high. So what's next for this pair? Last divergence developing on the weekly, bearish. Last divergence developing on the daily, bearish. 4-hour chart starts to show a false break. So we are after sells. So the best scenario would be, of course, second false break, right? Convergence and sells. Alternatively, one false breaks, convergence, and then setup could be also an opportunity to watch. Aussie CAD, we are after sells. We are validating. We want to get it validated, ideally by one more false breaks and sell. If this ends up as a kicker, that could begin even before the second false break. So one false breaks, full convergence, 2 waves retrace or bearish hidden divergence. We are after sells. Aussie CAD, bearish, looking for sells. Aussie versus the yen, we were bullish, and we are right next to the 50%, our target of the weekly triple cycle. So we can say, voila, amazing move, amazing payout, amazing work. Now, weekly starts to develop bearish hidden divergence, daily starts to develop bearish divergence, 4-hour chart supported, no false breaks yet on turnaround, so Aussie yen still is bullish. However, it's an amazing place and sequence of reasons to go and start to get a good cash out. Aussie versus the yen was perfect. Our last possible entry that we were talking about was right here with this double bottom, trendline breakout, and great move since. It was the last available trendline breakout on the 4-hour chart. So that's for the Aussies. Still bullish here. Be careful and cash out because we have all the signs to do that. Not fully, because we never got to the turnaround. Partially, main partial, already great idea. New Zealandian versus the dollar. I still do not have a clear read for my long term. Short term, bearish divergence on daily chart. Looks like a triple cycle finishing. Right? This is a classical place for some short term sells. 4 hour supporting. We require some false breaks or lower lows. Once we get them, we can go and trade the sells. So New Zealand dollar, bearish. It could push slightly higher to complete that. Looking for sell setups. New Zealand versus the Canadian. A great run for us. We have reached the 1091 plus. We are on 161.8 plus. So theoretically, what could happen in this moment, we can simply get it towards the 261.8. Definitely could happen. Weekly, still bullish. Now starts to develop a bearish hidden divergence. Daily starts to show slowdown. 4 hour, no false breaks yet. As differently from the Aussie versus the CAD already. Kiwi CAD, still bullish. Partial cash out, of course, a great idea, because of the divergences against. New trades now have to wait. New Zealandian versus the yen. We were bullish. We were aiming the 50% of the weekly triple cycle. 50% reached. Sorry, that's the measurement, right? And now signs against. Classical cash out. Easy cash out. Partial. Why partial? Because once again, no turnarounds, no false breaks, no convergences, nothing. So short-term retraces are acceptable. As for now, it remains bullish. And the New Zealandian versus the franc, one of the only ones that remains still bullish. Once again, divergence against developing, but no false breaks, no turnarounds. Still bullish. Get ready for possible cash out. We are definitely building up here a special cycle. It will resist on the coming weeks, but it's not there yet. So great partial cash out once we have the divergences against. No reasons for full cash out and turn around because there is simply nothing happening. The last variation for our trade was here, bullish hidden divergence on a daily chart, confirmed with the two waves of the 4-hour chart correction, bullish divergence. So we have daily and 4-hour chart confirming that, and this is an amazing trade running for us. And the next ones on the list, CAD versus the yen, CAD versus the franc. Previous week we were bullish on the CAD versus the yen due to the daily cycles. We were aiming the 38.2, which is almost to the peak reached. We don't have any opposite divergence now, but we do have the 4-hour chart to create two waves. So I would say CAD yen best scenario right now is neutral because we start to have different signs. Daily still bullish, 4-hour chart already making two waves, and 1-hour chart is, well, kind of confirming it. Ideally, of course, we still should see that, right, for before ourselves, but with this level, target almost be reached on a daily chart, 4-hour, making two waves, why to fight? So CAD yen, technically still bullish. Does it really worse the trades? As for now, no. After retraces, possibly yes. And the CAD versus the franc. We were expecting this pair to get us a new low. It never gave us a new low, but it did create for us a bullish divergence with a double bottom. Here and here. Okay, and that's, well, just once again, let's zoom in here a bit. That's the bullish divergence that we get. So that happened previous week. Right, 4-hour chart confirmed this scenario. here, double bottom from the daily, 2 waves on the 4-hour chart with the bullish divergence on the 4-hour chart and the breakout. So cat franc was and remains bullish for us. We are after buys. That's for the Forex part. Now let's move on and talk about the commodities. Gold, silver, and so on. So the first one on the list, gold. We are bearish here. The reason? No bullish divergence occurred on the weekly chart. Bearish one is popping here with the bearish hidden divergence pressure. Daily chart, the last divergence was bullish hidden. Therefore, we require the daily to become bearish. Therefore, something like that. And then it fits in daily with the weekly, or 4-hour to become corrective, meaning 2 waves or a range, and 4-hour does that exactly. So far looks good, but we need the trend to be broken and start to create lower lows, right? Before we start talking about the sells. So our idea is bearish. It could short term push slightly higher, no problem with that. Weekly bearish once the daily fits in or 4-hour completes its corrective cycle and turns, we going bearish. Silver was and remains same story, bearish. The reason is that we never got yet higher highs. So our plan is still for the sells. Weekly never got a bullish divergence yet, so the plan is again bearish. Okay, next one, oil and natural gas. Natural gas, make it simple, bullish. Every bullish 2 waves retrace or a range, we are after buys. And the oil, finally, after this huge drop of more than 2,000 pips, more than $20 per barrel, finally got us the false break and the corrective idea of the convergence against the weekly. Not yet with the daily higher highs. Might be not enough one convergence, right? We might still get the second low before the retrace happens, but the daily is a bullish divergence. More than 20 candles right on the Bollinger Bands. 4-hour chart fits in perfectly with its false break, so short-term corrections are acceptable. Invalidation, of course, the last low, because by breaking below that, we never know how deep it could go. Meanwhile, 2 waves in the 4-hour chart are very acceptable. That's for the oil. Short-term buys are in play. Long-term is still bearish. Coffee and sugar. So the sugar, basically, we are bullish with the weekly plan, weekly convergence, right? So we could get here 2 waves or keep playing inside the range. No problem with that. It doesn't change our plan, which is buys. Daily had a bullish hidden divergence for us. 4-hour chart make the false break and the convergence. So sugar is back to buys. Invalidation for the short term is this, because if it breaks below, then we might get deeper movement before the next portion of the buys. So sugar is bullish. And coffee, also bullish, also based on the monthly. The only problem with the coffee, we never got a convergence. Last divergence from weekly is bearish hidden. So weekly has to become bullish or daily to become corrective. Right, let's remove that. Daily is now making the 2 waves, 4-hour chart now confirming that, but we never got a trend line broken yet. We never have any higher highs yet, meaning we are waiting for the next bullish portion. So yes, monthly is a double cycle with bullish pressure. Weekly is against bearish hidden. We have to respect that. Daily becomes a corrective. Yes, never could tick a divergence yet, never broke the trend line yet, never yet make any higher highs. Therefore, no buys yet. We are after continuation up, yes, but we must first of all validate it. Next, indices. Nasdaq. After the triple cycle on the daily chart, we accept double wave correction or a range. False break, we might go for second false break and then movement in a range before the next portion of sell, or we are building up two waves before the next portion of sell. So short-term Nasdaq is bullish. Long-term, of course, due to the monthly movement, we are still bearish. Very simple. That's all. So the two waves have or range have to come from the daily. Weekly is also bullish, hidden divergence, right? So which is of course irrelevant because the monthly is bearish, but the daily compares the triple cycle, so it has to make a corrective cycle. Two waves or a range. So short-term bullish, long-term bearish. Same with the German DAX. We are still aiming the area of 10,000, maybe even much lower. But the weekly has a bullish divergence for us, so daily to become a corrective cycle. Daily could be two waves or a range before the next portion of a sell. Long-term sell, short-term bullish retrace is still acceptable and in play. And of course the UK 100, same story. We're aiming much lower according to the triple cycle from the monthly, but the weekly is currently at the bottom of this possible range pattern, meaning corrective cycle could be in play. Daily formed here a possible triple cycle. The only thing here, it doesn't really have divergence against, therefore our plan is for continuation. If weekly is the range, two waves or bearish hidden divergence or a range on a daily chart, and we are after sells. Short-term rallies could happen, long-term we are for sells. And for the for the CFDs that we have, so we are invest in Deutsche Bank due to monthly and weekly divergences and cycles. However, for regular trading, we don't yet have any higher highs after the breakout. Therefore, we are in a waiting mode for regular. For investment, this one continues to be interesting. And here we are, Vivendi finally breaking through the triangle, and meaning it became bullish. Okay, so that's the bottom line here. As for now, until the daily would become against. Currently there is nothing against, so Vivendi is now broke the triangle and became bullish. Cryptocurrencies, we had few on the list. The first one was the Ripple versus the Bit. We were bullish and we still are, as long as we hold the trend line and the lows are not broken. A bullish plan it is. And we were looking for the trend line, the higher high situation to be broken on Litecoin versus the Bitcoin here. That's what we wanted to break, right? To make the higher highs. We never got it yet. Therefore, we are waiting yet, right? We want to see the higher highs before we start looking for the buys to create a false break and higher highs environment. Okay. Now, can we use these current two lows? It's kind of tricky because histogram doesn't have divergence. Moving averages do have the divergence, so theoretically, yes, we can move it here and break above that. We can start looking for the buys, but the real one coming also from the daily cycle is this. That's why break above that would really validate something beautiful for us. Currently didn't happen, so we don't really trade it yet. And as for now, all the crypto related, that's pretty much what we have. So, few things. Once again, non-farm payrolls week. Remember, such weeks tend to be tricky or trickier. A lot of fundamental events this week, speeches and so on. And the main important thing, it's end of the year, which means volumes slowly will start to drop. Don't force, wait. It's better to have one or two good pairs to follow rather than try to follow them all and stay with nothing. So slow is better than fast and wrong, right? Slow but good setups and a grow is much better than fast and blow or fast and just rush into wrong setups. So the Pacific pairs look wonderful, the commodities pairs, right? Which makes sense. It's all about the commodities right now, recently. A lot of discussions. OPEC meetings for the oil really looks interesting. Yen pairs, some of them look interesting as well, right? Be there. That's the pairs you want to follow. That's the pairs you want to follow. Whatever is not clear and you don't have your synchronization, simply avoid that. No need to follow after all of them. Choose the 2, 3, 4, 5 ones that you have the full synchronization and follow them. They are the best. Because it's not a guaranteed profit, but it's the best starting point that you can ask for. That's all for today, guys. I wish you a wonderful trading week, and tomorrow we are back to the live trading rooms. See you, and thank you for watching.